Hi guys. So we are still looking at the execution phase of the audit. Remember we said audit is always beginning from planning to execution to reporting. Yeah. This is section B, C and D of the syllabus, and this is E. A is framework, which I've said it cut across every stage of the audit. Very important to note that. Yeah, and this is section C where we are talking about. We are done with B, we have done with A. So we are looking at C, and C is on internal control. And I've told you the reason why internal control is so critical for the auditors, because it affects the NTE of the audit, which is about nature, timing, and extent. Yeah, if the control is good, the extent of the audit might be low, which means not so much work. But if the control is really poor, then they have to do so much work and the extent will be so high, and a lot of substantive work will have to be done. So remember, I told you in the previous class that there are some standard processes you are required to understand for this internal control. I listed them. I remember I spoke about revenue process, inventory, contingent liabilities, cash and bank, like that. But what I want to do is I want to take each of those mandatory process one after the other, and I will teach you all you need to know about it, because your question cannot go outside of those mandatory 6 processes. So that is what we want to start looking at today. Yeah, and we're starting with revenue process today. What is the requirement of the auditors in regards to internal control of any process? Remember, I told you auditors are required to understand every process. They are required to document it, and you must test it. Document and evaluate, then you test. Right. So this is how we're going to be addressing each process that we take every lecture. We need to understand it, we need to document it, evaluate it, and test it. So whatever we do, this will be our structure. Every process you pick, you need to ask yourself, do you understand it? Can you document it? Can you evaluate it? And can you test it? This is the same way your exam questions will be asking you. But they might not ask you directly to explain or to document or to evaluate. But I will tell you how they will ask you, right? Which you will not be able to answer if you don't understand it this way. So remember, for auditor, you must be able to understand every process. Now talking about understanding from initiation, when that process starts, to the point where it hits your financial statement. Because your financial statement is what your opinion will be based on. However, there are a lot of processes that will take place before anything goes into financial statement. And your financial statement is your GL, which is your account records. Look at it like that. Yeah. So when we're talking of revenue, a customer is coming to buy something. From the point that customer is deciding in his mind to say, I want to buy something, that is where your process starts from. To the point where he has bought, he has paid, and entries have been posted. So that is why I always appreciate students to take FR paper first before audit, or take FR and audit together. But it doesn't mean that if you don't take it together or before, you can't do well. It's just that you need to learn a bit about your debit and credit, which is just a bit covered in your FA. So if you're solid in that, that will also help you a lot, because entries, postings will be very important in audit. It helps you to also demonstrate understanding, and you can appreciate the accounts that are impacted by every process, because it's important. Like for revenue, you always know that your entries for revenue is to debit account receivable, credit revenue, and so this is sale. Then when you receive cash, you debit your bank or cash account, and you credit account receivable. So you can see that account receivable is one account you must be talking about, revenue account itself, and bank account. So there are three GLs that are impacted. So when we're talking about the understanding, you will see that by the time we look at the processes, the controls, the risks, all of these will be impacted. Yeah. So let's start with that understanding. How does that start? Revenue process. You need to understand it. And the starting point is customer order is received, because a customer needs to buy something. So customer will come to us and he will submit his order. So customer order is received. When we receive the order, we have to process the order. So we process order. And so this is the first stage. We receive the order. The second stage, we process the order. Once we process the order, what do we do next? We dispatch the order. We dispatch the order. And after dispatching the order, we have earned our money, so we can raise an invoice. Because we have sent the order to the customer, so we raise an invoice. And once we give invoice to customer, what do we expect the customers to do? We expect the customer to pay. So cash receipt. Please remember that we are the ones selling. Don't get confused with what customer is doing. Focus on what we are doing, because we are the one that is going to make money, right? We're the one that is going to make money, and we are the ones selling. So always focus on the seller's end. And once cash is received, when we raise invoice, we must post entries there. Because at this point, we've earned revenue. And when we receive cash, we will also post entries. So these are like side activity going on. What entries do we post here? We'll debit account receivable. We'll credit revenue. When we receive the money, we'll debit cash or bank, and we'll credit account receivable. So if you need to take a picture, quickly take a picture of that, because that is a summary of revenue process. Now, we've been asked to also learn how to document and evaluate. And likewise, we must be able to test. How do we document? Now, I'm going to teach you how to document, which is the way the exam will always ask you to document. I will give you everything in one page here. The exam can ask you everything, but most times they won't ask you everything. They will pick some of them, but I will give you everything where they can pick from. And it can never go outside what I'm going to give you now. So please pay attention. So documentation and evaluation and testing is what I'm putting together now. Documentation, evaluation, and testing of control. That is what I'm going to put together now. But before I go into putting it together, let me just explain this to you so that it's easier for you to understand. When you have a process, like a revenue process we are looking at, and we have looked at the process now quickly. This is the process. 1, 2, 3, 4, and 5. That's the summary of the process. You need to think about inherent risk, audit risk, control risk, right? But in this part, of audit risk, we are focusing more on control risk. And what is the essence of control? Why do we have control? We have control such that we can mitigate our risk. Stay with me. Why do we have control? We have control so that we can mitigate our risk as the company. Remember, you are looking at the company's controls now. When I spoke about audit risk, I said there are three components: inherent risk, control risk, and detection risk. It's only detection risk that is for auditor. Control risk and inherent risk is for the client. We don't have business with inherent risk. There's nothing we can do about it. What we are addressing now is control risk. So now we're talking about the client process. Let your mind switch to the client process and see yourself as an auditor. So client has a process called revenue process. Now they have controls to mitigate the risk, and you are meant to test, document, evaluate, and test the controls. Now, what is risk? Risk is just anything that can go wrong with that process. Anything that can go wrong with that process is anything that can stop you from achieving your objective in revenue process. So we will take each of these process. Customer order is received, process order, the dispatch order. We will look at each of them and we will ask ourselves, what can go wrong? And that will be the risk. So we have a process. So let's start to document now, because the documentation will always be in a tabular form. That is the way the exam will always ask you to do it. So start practicing it now. So we have the process and we will have the risk. Remember I said risk is anything that can go wrong. So the first process is order, customer order is received. Then the question is, what can go wrong? That is the risk. Now, if we know what can go wrong, then it means that is why they are actually trying to come up with controls. However, you don't just jump into control. You need to know first, what is the objective of that control? What is that control trying to achieve? Remember, this is very easy, because what the control is trying to achieve is to protect the company from the risk. So it's the same wordings we'll be using, but you now need to learn how to use the right word, because that is something you will start learning in audit. Ability to pick and use the right word, because sometimes students know it, but they cannot express themselves, like a 1-year-old baby that knows what she or he wants to say, but doesn't know the right word to pick. However, listening to this video, practicing questions, and testing yourself will build that skill that you need. Audit is a skill, and you need to be taught, and you also need to practice. Right. So, when we know what can go wrong, the next thing is, what will be our control objective? Which means, what would the control we want to use to prevent that risk? What will be the objective of that control? What will it achieve? And then we can now design the control, which means the control activity itself. So this will now be the control itself. So once we put the control there, then auditors can check the control on this column. Yeah, let me label this column A, B, C, D. So this is column A, column B, column C, column D. So at column D, auditors already know the control that he saw in the process. Then once you know the control, then you can now evaluate the control on that column D and see whether this control is good or is not good. That is evaluation. This is where you are doing evaluation. You are doing evaluation here. All these stages, you are doing evaluation. Trying to see, okay, with the risk that I have, with this objective, is control activity good enough to achieve the objective? and to prevent this risk that we are talking about. That is the evaluation. So if you now decide, excuse me, if you now decide that the control looks good, then you can now go ahead to test it. And that is why you are required to be able to design test procedure for every control. So ladies and gentlemen, there is no exam question on internal control outside this for any process. Is it that the question is asking you to document the risk in the process when they will give you the case, because that's the way exam is going to be. They're going to write up a case on a particular process. They will ask you to identify the risk. They will ask you to identify the control objective, or they just say identify the risk, the control, and how you will test it. Then it means that it's only B, D, and E. Sometimes they will say identify the risk, the control objective, control activity, and test. That means they are asking you all the 4 columns B, C, D, E. Yeah. So, and I will give you almost everything you can see in revenue process. It's not going to go beyond that. Any case they will give you will stay in between all of this, because I'm giving you everything that can go wrong for each of those 5 processes right now. So this is what you need to practice. And let's keep going. So now, this column is the maximum you can ever be asked to do. And last, let's take it one after the other. Now, order received. Order received means that customer has submitted the order. And the question is, with customers submitting an order to a client, what can go wrong? The only thing that can go wrong is that customers will make mistake in the order. So customers make mistake. That is what can go wrong. That is the risk. Customer wants to order 5 items. He put 3 items. Customer wants to order computer. He puts laptop instead of desktop. Instead of monitor, he puts iPad. Yeah, you might say, well, it's customer's problem. No, but it's going to waste our time as well. We don't want to process an order that will eventually be returned by the customer. So we don't want it. Remember, this is process. Yeah. So customers make mistake is what can go wrong. Then our control objective is to ensure that order details are correct. That is what control that we want to design must achieve. The control must make sure. So what you will now see is, now I'm introducing a word that will be constant under this control objective. Please take note. It must always start with to ensure. Please take note. To ensure. To ensure the risk does not crystallize. And what is the risk? Customers make mistakes. So which means this will now put in a different word and say to ensure that customers' other details are correct. Ensure that customers' orders details are correct. That correct. Let me not squeeze it in there, because I need you to see it clearly. This is serious. Correct. Customers' orders are correct. That is what you want to achieve. Now, what control will ensure that customers' order details are always correct? The only way to do it is to confirm every order by email to the customer to agree that those details. To say, okay, you now place a phone and call and say, Mr. J, I received this order from you, 3 units of computers from HP. Please confirm this is correct. Or you send email, and when we get to audit evidence, you will see that there are different types of audit evidence. Written evidence is always your best form of evidence. And that is why when you are designing control, make sure it's not verbal as much as possible. Someone must be able to see it. So that is why we will use email as confirmation and not phone call, because customers can deny that phone call or say someone else picked the call. But if there is an email where customer confirmed the order details, then it cannot argue it. So The control now is to confirm every other details. So every other details. By email. Hope this is clear. By email, to customer. And customer must acknowledge it, yeah? Must confirm every other details by email. You send email to customers to confirm the orders. And once they confirm, then you can process. So as an auditor, do you like this control? Yes, this control is good. Then you can test it. And how do you test it? Testing means you are looking for evidence that that control is operating very well. Remember, I told you that when you are testing control, there are two things involved. You are checking whether the control was designed appropriately. Because if it is not designed appropriately, there is no point for you to test it. So once the design has passed, like we have passed here, then you can now test the operation, which is whether they are now using the control the way they should use it, right? And how do you test that they are using it the way they should use it? Now you need to just obtain sample emails. So here, the test for this will be to obtain sample emails of order confirmation. That is your test of control for that control. Now, that is it for that stage.